risk. Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the June 23rd, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much, much more important than that. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there, too. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Taco Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices in the green out here, with the exception of the spot volatility index, so that's normal. And the spot volatility index is trading well below its 50-day exponential moving average. That's trading out at 30.32. 50-day 33 and change out there. I think we'll take a look at it. The Dow's up 243 points, trading out at 26,269. S&P 3149. Let's do what? Well, gold is up $15, silver at 15 pennies, both about 0.9% to the upside. Natural gas still can't find a bottom. The 30-year Treasury down about a half a point, 16.30 seconds out there. Leading the charge dollar-wise to the upside, it is Amazon up $59 or 2%. Shopify 23 $23, 2.5%. Booking Holdings 22. Google's up 19. To the downside, it is Chipotle up 19, $20 out there, trading out at 10.50. Grayscale, Ethereum down 18. You got Teledyne Technologies down 9. Transdigm Group off about 8 buckaroonies out there. There are a couple of questions that are in. Let's take a look at Ian wants to take a look at the Dow. Ian is short the Dow, and says, I know I may have I may be early on this trade. Purchased half a position, but looks weak. Can you let me know what you think, or where we would put a stop and where you would buy? So you went into SDOW. So the answer here, so the stop is going to be real easy, Ian. Now, I don't know what you did share-wise, but folks, each of you should do this out here. It's just called position size, and it is the most critical element of trading and investing. So the very first thing that somebody should learn would be position sizing, because you want to be properly leveraged out here. And so, and this is the way that you stay in the game permanently, no matter what out here. So position sizing basically says this: you take a certain percentage of your working capital. Typically that would be 1%. So for every $10,000 you're dealing with $100. That's your risk. Now, your risk, that's not how much you would invest in SDOW. That's the risk that you're willing. If you lose $100 per $10,000, you're going to go ahead and exit the trade. So what's our next step? So we know we got our risk. That's a simple calculation. 1% of your free working capital, whatever that is. So let's just use for every $10,000. Then what we do is we figure out, well, where does our stop need to be? How wide does our stop need to be? For me, the easiest way to do that is take a look at the 10-day average true range. That's the blue line on the left-hand panel of my screen out here for SDOW. So we are going to help out Ian on this trade out here. So let me actually put in some of these numbers on my spreadsheet here. And this way I can actually get it right. So the average true range on this for the last 10 days has been $1.74. So what we're doing is we're taking that $1.74, and my suggestion is, especially in a high volatility market, you want a wider stop, not a smaller stop. A little counterintuitive to what most people think. Most people will say, you know what, these markets are so volatile, I'm just going to use a tight stop. Well, here's the news. If your stop is anything less than the average true range, that means your average daily movement out here, the chances of you being successful in the trade have been minimized substantially. Because what you're saying is on a tight stop, something less than $1.74, you're saying that you know where the exact bottom is. And I don't think that any of us really do that. We've got these great tools out here. They tell us where there's bottoms, but you can have price push lower and then bounce back up, or push higher and bounce back down. We see that all the time. So understand what the average daily movement is. I suggest using a 10-day period, but use whatever you'd like, and then multiply that, because that's just average. And I guarantee you, if you set out in life to get average, what are the real results you're going to get? Are you going to get average? No, you're going to get way less than average. We don't want that. We want extraordinary. We want extraordinary results out here. So you're going to take that $1.74 and multiply times some figure. I like to use 1.618. It's a Fibonacci expansion. You can use 1.272. If you use 1.618 times $1.74, that number comes out to $2.81. So your stop, Ian, should be $2.81 below wherever your entry was on that. But that assumes then that you took that $2.81. You took the $100 risk divided by 281. I'm going to use $3 now, and you've purchased 33 shares per $10,000. If you haven't done that and you are over leveraged or what have you, or you said you took a half position, so it should really be about 16 shares per 10,000 in free trading capital. If that piece of it's not right, then get that right. Make that adjustment out there with regard to SDOW. Now, with regard to SDOW, we're not going to focus on this with regard to where the Dow, what the Dow is doing out here. Instead, we're going to go take a look at the Dow. We'll take a look at the Dow futures. If you're asking me where's the next place to add to your position here, I would say it would be Stevie's green line. Because what we've seen here for the past 3 out of 6, 7 trading sessions out here, we've seen how price has spiked that level, but by the end of the trading session, prices close below it. That's the beauty of this. Not a moving average. You should really learn this. You can learn this by going over and signing up for Mastering Probability. There's a workshop that will take you through the exact details of this. But I would say, Ian, if I were going to add here, I'd be looking at 26,420. That would be one spot to look at. Where would be another spot? Well, I would also go take a look at the equity future contract. So let's go do that right now. As we take a look at it, and we're taking a look at the third panel out here, we take a look at YM. Here's what we know. We know that the NASDAQ, above all resistance levels, it's up at almost near the high of its trading session. We know that the ES Mini is not above all profiles. It has resistance. You can see a descending trend line, which ties right into the top of its daily profile. So that'd be 3190. 3190 in the ES Mini would be another area that you could consider adding the short to the Dow. You see, the NASDAQ and the ES and the S&P are stronger than the Dow or the Russell. So, Ian, another way to take a look at this is when the strong dog gets to resistance, this case here, not the NQ, but the ES Mini, that's the 3190 area, that might be the spot to put on the additional position inside of the Dow. Steve Rhodes with TFNN. Look right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
6 S&P is 32, and I'll just pull this chart over here just to answer Ian's final question, which was, is there any kind of TD9 count pattern on the daily or the weekly? Here's a daily time frame chart, and you can see just this sideways chop, so there is no pattern. The TD9 count pattern did identify the top out here. This is the Dow Equity Future Contract, as well as that Rhodes Momentum Indicator signal out here. So nothing in place. And on the weekly, the same thing. You are in bar number 6 of a TD9 count, but no topping pattern. That would require, well, price to head much higher than where we're trading inside the Dow. You would be stopped out of that position, I would imagine, by then. So that's the current take on the Dow. Now, what Ian has to be careful about is this, and that is that we've got the spot volatility index below its 50-day exponential moving average. So 3318 is the number, and as long as the spot volatility index is below the 50-day exponential moving average, then odds would favor that the buyers should be able to push the ES Mini up to the top of that profile. Now you're looking at the right-hand panel chart. So why would we say that? We would say that because you can see that it's a bullish structured profile. Bullish in structure because you'll see 3 lines. If you look close enough, you'll see a green line at the bottom, buyers. Red line, sellers. Cyan line, the bluish line, both buyers and sellers. Since there's buyers and sellers at the center, when that line is closer to the bottom, then there's more buyers in the 3042 to 3072 level. Typically, once you get a bullish or a bearish structured profile, and price is able to get above or below that center line out there, depending on whether it's bullish or bearish. In this case here, bullish, so above it, price or buyers should have the ability to push price higher. Now, what's in the way out here, I can't tell you why it works. I can tell you how it works. I can tell you that it does work out here and that you do pay attention to it. And that's Stevie's green line. That's the oscillator and change line. And we take a look at the ES Mini right now, you can see we're trading, in essence, right upon it. Now, let me I'll pull over now the numbers are going to change slightly, but if you give me just a moment, I did this, I think, during the 1 o'clock update. I should do that for each of you now. Subscribers get this each morning, so they're aware of the levels out here for each of the indices and the sectors inside the S&P 500 and some various ETFs out there. But these are the numbers to be paying attention to. If, in fact, the ES mini can close above Stevie's green line, it's currently printing at 31.4075. That's the daily time frame. Then we're trading at 31.41, so we're just above it. It's, just closing above it by a buck or two on a $3,000 instrument doesn't really blow my skirt up. So it's got to be a nice close above Stevie's green line out there. And then, of course, you need that second close. But if we do see that, odds then favor price being able to run up to the top of the profile, which is why I focused on that for Ian with regard to his second position inside of the Dow. I didn't want to focus on the Dow because I think there's other factors that we can take a look at strength and say, where would strength likely find some resistance out here? That's what you and I are doing. And what we do know is when we take a look at the extraordinary tool out here, that spot volatility index, extraordinary when we learn how to use it. There's many uses of it. And the uses that we don't pay attention to are the ones where folks say the market's complacent. What the Sam heck does that mean, really? And how do you trade that? What you can do is pay attention to where the spot volatility index is in relationship to its 50-day exponential moving average. These yellow and green boxes, what they will do is they will guide you as to what the message of the market is. Below the 50-day, it doesn't matter what the print is. We're printing at 30 right now. Some people would say we're in an extremely volatile market because it's printing at 30 bucks out there. That is not the case. Hey, let's go to our first caller. Let's go to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you today?
I'm doing fantastic, Steve. How about yourself?
I am also doing well. Good to hear your voice. You have a nice Father's Day weekend?
I did. It was great. I got a little surprised. My oldest son lives up in Tahoe, and I didn't think I'd see him that day, and he showed up about, I guess, 1 o'clock in the afternoon. So that was a real pleasant surprise to see him.
Oh, great. That's great. That's great. So has he been living in Lake Tahoe for a long time?
He's the one that was a big kind of world traveler, had been all over the place, a lot of different countries. And so in the last couple of years, yeah, that's where he's been living.
Oh, what a great! I used to spend a little bit of time there because I had a store a couple of stores in Reno, And if you're in Reno, you got to take the drive and go up to Lake Tahoe out there, and just what a great place to water sports, ski, golf. I mean, that's a beautiful place. I like it there.
Yeah, if you're into any kind of outdoor activity, that's a good place to be. And he's on that side. He's on the North Shore over there. So.
Okay, perfect. Good. Okay, so let's talk about Frontline. FRO is a ticker symbol, and I know that everybody's ears are perked up because if Brent's calling about something, people want to know. So tell everybody what you're doing and how we can help you.
What I was hoping you could do, Steve, there's actually two I'm looking at, and they have pretty similar patterns. This one, and then the symbol is DSSI. It's Diamond S Shipping. And so I just wanted to get your take. I've looked at them fundamentally, and they have their pros and cons, and I just wanted to get your thoughts as far as technically if one kind of stood out as being better than the other.
Okay, so let's take a look at Frontline first. FRO is the ticker symbol. And so what we know right now, folks, is that price is trading below its daily profile. But as a swing point out here from the trading session of May 14th, there was about 4.2 million shares. Price traded into it yesterday with 3.3 million shares, so a little bit lighter volume out there. So we'll go see if we can find some type of bottoming signal. The weekly has pulled back to support. Not exactly to the tick, but 721 is the number, and the low so far this week has been 726. That was yesterday. The monthly also has support, and it's at 703. So pretty safe to say right now, Brent, That front line has support between about 703 to 721 out here in that range. Now, let's take a look at our other charts, see if there's any other kind of signals. For example, is there a TD9 count pattern? Is there a Rhodes momentum indicator pattern? There's none of that when I take a look at the daily time frame. What price is doing, though, it is pulling back to two breakout areas, so 741 and 746. Those are the red horizontal lines on my screen out here. So no bottom signal other than price just pulling back to support. It's done this, as you can see, in March, and then we've seen some bounces. We understand why it topped in the 9, and a quarter-ish type range. It was a TD9 count pattern that identified the top, and now prices just simply pulled back to a support area on its daily time frame. On the weekly time frame, if we populate this chart, no signals out here other than just where the bottom of the profile is. I suspect we'll see the same on the monthly, which we do. So there's no real signal here at this stage other than price pulling back to support. We can see on the monthly that front line top with a TD9 count pattern, which pulled right back to the breakout area, which was 633. And so you can see, folks, when price does pull back to a breakout area, even without a pattern, that can be a place to go ahead and enter a long position. So on the longer term or the weekly, it would be 633. But I don't have a signal that suggests that we get back there. Hey, Brett, we're about to go to a hard break, so please hold on through that. We'll answer any question we get back from the break on Frontline, and then we'll go take a look at, I believe the ticker symbol is DSSI. Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now's a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with Brent in Martinez, California. We're going to take a look at two different equities. One is Frontline, FRO is the ticker symbol out here. And Brent's question is, of the two, maybe which one looks better? So from pulling back to a breakout level, we like how this looks out here. But, again, I don't see any other bottom other than just pulling back to a breakout level that is held. What questions, after going through those frontline charts, do you have?
It's very helpful, Steve, as always. It doesn't look like there's any compelling reason to be, getting in there at the moment. Just be patient and see how it acts here with some of these support levels. And I just was wondering what you thought about the other, and just if there's something there potentially that you saw.
Yeah, so let's take a look at Diamond S Shipping Inc. Similar to Frontline, and that price, folks, is below the daily profile, but here it's also below the weekly profile. Now, what it did last week, it tested a swing point from the week that began April 6th, 2020. And the volume there was 2.667 million shares. And last week it was tested with 2.7 million shares. So slightly more volume. When you push into a swing point, even though it was rejected, you push in with volume, typically says price should get back there and test it. Well, that's what it's doing this week. Now, the volume this week, only 745,000 shares, but I don't know what that equates to by Friday out here. But if this were going to be a buy, you'd like to see a rejection of that 862. It's traded 849 right now. So that'd be the first thing that I would say. The second thing would be, where did I put it? Okay, right here. So as we take a look at my other chart patterns, and the monthly doesn't provide enough data for us. It's only been around since looks like April of 2019. So there's no profile information, just not enough data. On the daily time frame chart, today is going to be bar number 9 of a TD9 count. So it's got the potential for a bottom. Similar to on the weekly we identified the swing point that it was testing. On the daily, we can see that the TD9 count breakout level was 871. So there's really a couple different ways that you could trade this. Now, the low can come on bars 8, 9. Well, since we have a lower low today, it would either be today or tomorrow. So you'd probably want to wait at least for that. Then you might consider waiting for price to get above that weekly bottom of that swing point out there, or above 871, back inside the range or above the breakout level on the daily time frame, or 895, Stevie's red line. I'd be more inclined to take a look at a close above 871, but in that case, you may be so close to Stevie's red line, you might wait. But of the two, which one has the better bottoming signal? This one at least has a bottoming pattern. But Frontline had pulled back to what should be a key level of support. There's nothing here, Brent, that I see on the weekly time frame. Weekly time frame would be in bar number 7, and this would say that the week could come sometime, or the bottom could occur over the next 3 weeks out here. And again, the monthly doesn't really provide us with a lot of data. So what questions on DSSI do you have based upon what I've shared with you so far?
Oh, it's fantastic, Steve. I really appreciate you going over things as thoroughly as you did. And again, I don't have any position in either one of these. I'm just watching them as I normally do, and just seeing if there was something that you might have seen that I didn't catch. And so I do appreciate you going over it as well as you did.
Yeah. So now Diamond Shipping. You've been watching this? Is this a dry bulk carrier? What do these guys do here? Do you know?
I want to say both of these actually do more in the transportation of oil, not the dry bulk.
Okay. Well, hey, there you go. So oddly enough, we haven't seen then this type of a entity take off along with light sweet crude, which may be nearing the top out here. I don't know how the two correlate out there, and maybe there's no correlation whatsoever. So since we don't know if it correlates or not, we'll just pass on that comment. We'll just rewind it and not worry about it, okay?
Yeah, they seem like they were actually moving more like, NAT and some of those. Yeah. Excuse me, when there was that whole deal going on with oil being so low, and they were storing oil, and so they had there's a lot of it being transported to different locations to store it. And so I think they were benefiting from that, and that's kind of played out. And so maybe, they may have already kind of had their run because of that, but we'll see. I'll watch it, and I hope you had a good Father's Day as well.
I did.
Appreciate you asking about that.
Oh, no, I did. Thank you very much. It was a great Father's Day. And, what I was thinking about last night, because one of my kids sent a card and I got it last night. I'd read it to you. I read it to everybody, but then I'll start crying, and you'll just think I'm a little ninny or what have you. But just a great card. But what I was thinking of, Father's Day, it's probably the one day a year we should always ask ourselves this question here. But it probably is the one day of the year we should ask our kids, how can we be a better dad? They probably have they probably have a long list. We might not want to hear it, but actually, so that was my thinking after I read this card. Not because I was trying to figure out after there's one daughter sent me this. I was like, well, man, okay, I got to answer that question. So now what do I do to be better?
I was feeling pretty good myself. My oldest son, again, the one that came out from Tahoe, he's a very good artist. So he made this whole I'm into fishing, so he did a real nice drawing of a fish on the front of the card, and of course, the note itself inside was just filled with a bunch of adulation, and so I was very pleased. It was great to hear them, kind of give you feedback about what kind of father you've been, and
Absolutely.
My youngest son did the same thing, and so it's always it's nice to hear, and I'm sure we both try to do our best, and I feel like I've done that, and they seem like they've got a good foundation now, and a lot of good things happening. He's going to be getting married in August, and that's still a little up in there as far as how it's all going to play out with the ceremony itself.
Yes.
But they're going to get married either way. They decide they're going to do it regardless of what happens with this other stuff. And
good.
Everybody's moving forward, and things are looking good for my younger son. And I'm just happy to see him. I think they're going to have great lives, and they have so far. And I think going forward, it looks positive. So.
Yeah, tough, a weird time, just a weird time for so many different things, out there. I mean, I've got a brother that we still, brother-in-law that we still haven't buried, so to speak, out there, at least from a service standpoint. So we're trying to figure out how to really pull that off. I've got one of my best friend's sons is scheduled to be married in December in New York City. And we keep saying, man, that might not be a great idea. Assuming that this thing is going to come back and how bad New York had it. But, how do you figure that one out? Because they already have a lot of plans that are in place out there. But anyway, we'll get through all.
With them. I think they came to terms, and whatever happens, the most important thing is the marriage, So
right.
As long as that all works out, which I'm sure it will, that we'll figure out the other part, and they will too.
Yeah, exactly. All right, Brett.
Take care, Steve. I really appreciate it very much. It's great talking with you, and you take care and have a great week.
Same here. Thanks for calling. So we've got a couple of requests out here. One from Josh. Josh writes in, he says, I'm an owner of this equity, PLUG. So let's put that up on the screen here for us. Try to get a feel for where it's trading in relationship to, let's put in the correct symbol, PLUG. I can usually that spells plug. And so I'm in at about 550 for a long time. Oh, we're about to go to a break, folks. I'll be right back. We'll take a look at Plug Power Inc. when we return.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
PLUG, that's Plug Power Inc. out here for Josh. And Josh has been in this equity for a long period of time based upon his email. And his question is, should he get out? He's in the money now, so that's good. In around 550. It's trading at 671. So to answer that question, what we have to do is make a determination. So technically, I can answer the question for Josh out here. You know, do we see any kind of a top and a kind of resistance? So you're trading above daily, weekly, and monthly profiles. So you're above those resistance levels. There is an A to B equals CD pattern that is underway. As we take a look at it, well, let me put this back in here. So A to B equals CD. So we're going to start with our 8-point down on March the 17th. This is the daily. We're going to try to. Come on. Work. We're on the air. Come on, why aren't you doing this? There we go. There's our A point. Our B point out here that I'm using is the high from April 17th, and the C point's going to be the low of the retracement to May 1st out there. You'll see it's only a 43% retracement. Now, when price did make the 1-to-1, A to B equals CD, there was the bear sash candle that formed right here on June 11th. So that was a confirmed sell the D point. But what we can see is that was the extent of it. There was a brand new profile that formed following that. Price is now trading above the top of that profile, 541. You've got a wide-ranging bar coming into the 1.272. This is telling us, Josh, A to B equals CD land. That price is going to target 737. Not a guarantee, but that's what the next price target would be inside of ticker symbol PLUG. Let's pull over my other charts out here, see if we can find any kind of a top. And here we can see that this formed, when it did form a bottom, nice TD 9-count bottom, bar number 8, March the 17th. When it makes its high out here, a bounce off of that bottom, it does with a TD 9 count. That was on April 17th. Price then pulls back and just kind of trades sideways. Do we have any other TD 9 count pattern right now? We do not. Today, Josh, is going to be bar number 5. That says if the TD 9 count pattern replays itself out, you've got 3 to 5 trading sessions, because it would either be on bars 8, 9, or the bar following 9. So I don't have a signal here on a daily time frame for you to exit that position. If I take a look at the weekly, do I have one? No. Look on the weekly. The TD9 counts have been working magically here. Magically delicious. You take a look at the TD. Let me get my cursor out here, make it a little bit easier for us. Take a look at this TD9 count high back on April the 12th. Price moves down, moves lower into support of the bottom of its profile. We have another TD9 count. That was just a hiccup of price testing support, Stevie's green line out there. But you don't have one now out in play. You're only going to be in bar number 5 on the weekly basis. So this could have, if this were to identify a top, this could have quite a bit of room to the upside out here. If I take a look at the monthly time frame chart, what do we see on the monthly? We don't see any kind of a topping signal. So I don't have any reasons to suggest that you should exit this position. So what do you do in a case like this? Because I think Josh is a bit nervous, which makes sense. Been holder for a while out here. When you take a look at this equity, just to give an example out here, this has done a number of reverse splits, or this was a shell. I don't know which it was, because this shows a price trading out at the high on January of 2000 at 1565. So reverse split or some type of shell, or probably reverse split. In any event, the answer to your question is I don't have any signal. Now, when we do take a look at this monthly time frame for you, what we do have is we have some swing points where there may be resistance. And that resistance out here on the monthly gets us to 1172. If I try to come back to a prior swing point, it's about 1041 out there. So what do you do out here? Here's what I would suggest. The average true range on this, Josh, is 48 cents. Multiply 48 cents times 1.618. I don't know what that number is. I'm just going to call it $1 right now. And make your stop. Adjust the stop, make it $1 below where it's at. Well, $1 below where it's at 669 gets you to 569. Maybe it's slightly less than $1. You've got to make a determination whether or not you want to give back. That's now just the average daily movement then. Multiplied times the Fibonacci number. Average daily movement, again, is 50 cents out here. But that's what I would consider doing. Now, you've been a holder for a long time. Another thing that you could do is get your principal back. So sell enough shares so that you've got your capital back. And, that will build out. In essence, that's your trailing stop, your average true range is one way to do it. But you could get your principal back and you could stay with this trade. And then you've got, in essence, a free trade out there. I think one of the most powerful things, we don't talk about it enough on the show out here, but let's assume that you were building a portfolio for your kids or your grandkids out here, and you were managing to form with the intention of being able to, give it to them at some point in time, 18, 21, whenever it might be out there. If you just simply built a portfolio because you had a long-term mindset out here that you bought positions when you got profits, you went ahead and you got your capital back and you had all these free shares, and then you have this portfolio that's basically just all of these free shares out there. What a empowering way to for your children and for your grandkids out there. So and it can work for yourself as well, Josh. So just consider that. But if you're asking me, do the charts daily, weekly, or monthly show any kind of topping signal? The answer is no. So thanks for writing in. I hope that helps you out. We had a request inside the Tiger's Den to look at ticker symbol OSTK. I believe that is Overstock, if I'm not mistaken, overstock.com. I don't know what our Denner was looking for here. But that's okay. Let's go. Give me 1 second here to get the other stuff. Here's what we know about Overstock. Above the daily, above the weekly, above the monthly profiles out here. So it's free of profile resistance out here. Weekly looks like it might have a shooting star formation, but it's only early on Tuesday, so we won't spend any time there. Now let's take a look at what Overstock is doing as it's up in this $26, $28 area. Price is moving higher on its daily time frame and is doing so with less relative energy. So it's triggered the Rhodes Momentum Indicator signal, but we need to see a bearish reversal candle. Today is not it. Not yet, at least. Could be a bearish reversal candle, but just depends upon where price might close. The other thing is price would have to close below Stevie's green line. That's 24.98 in order to generate any kind of cautionary further retracement, sell signal, with price pulling back into the 2012 1795 area. But look at the weekly time frame chart for us. Let's see where we're at here. No TD9 count, but price has gotten back to a prior swing point out there. And oftentimes that can be where price might stop. Do I see some type of top? I don't. Just a prior high where price then turned down out there. So what that does is that just suggests using some type of trailing stop on this position if you are in this position. On the monthly time frame, no bottoming signal, but price is well above its market profiles, above Stevie's red line. And longer term, price overstock could be targeting the 63.50 area. So overall, overstock looks good. I would stay in it, and I would just be watching. I would be concerned of a potential Rhodes momentum indicator top, but that has not occurred yet. You need a bearish reversal candle. Let's go to Overland Park, Kansas, and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you today?
I'm doing great. Thanks for taking my call.
I
was telling my wife, I think the only thing left for 2020 is an alien invasion. We're scheduled to get hit with, we looked at the news today, and we're scheduled to get hit with a big dust storm from Africa and Kansas. It's like, seriously?
Oh, well, we should probably get the dust storm, and then the locusts are going to come. And I've already seen the invasion. Folks, this is a joke now, because every time I go out, I see people wearing masks. They look like they're from another planet. Hey, we'll be right back. Robert, we're going to go to a hard break. We'll be right back in just a few minutes.
All right.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we're on the line with Robert we're in the 2-minute countdown here. Robert, SCCO is the ticker symbol you want to look at. Tell us what you're doing and how I can help you.
I don't currently have a position, but I was considering taking a long position. I just want to get your thoughts. It looks like I'm trying to decide if it's topping out or getting ready to take another leg higher.
Okay, great. So if we take a look at Southern Copper out here, price is trading above its bearish structure daily profile. That's bullish. It's right now trading above the top of its weekly bearish structured profile, which is at 37.48. You want to see it close above that, so that's bullish. But resistance is at 40.54, and that's been the high of the month of June out here. And 40.54 has been close to 40.54. The actual high is 40.31. 40.54 is the top of its bearish structured monthly profile. So it's got one more bearish structured profile that price must close above out here to say that it has really broken out from a longer term standpoint. So would I take the trade now, knowing we're up at resistance? Well, let's go look at the other chart, see if we can get any kind of feel. Now, because this is copper oriented, if we take a look at the copper futures contracts out here, we're going to see, so the active contract right now is July. And as we take a look at July, you can see that price is running into a descending trend line. So the price of copper is running into resistance as well out here, and it's another reason to maybe just be cautious out here. Let's pull over SCCO, see what else we can see with my other charts out here. So for the daily time frame, do we have any kind of a topping signal? Well, we had a TD9 count top, so that's the most recent high out here a couple of weeks ago, and price is trading right into Stevie's green line, so it's up at a resistance area. This says just be cautious. Your better buy in SCCO would be 35.46. Now, I don't know if price will get down there. It already has one since that TD9 count. But as long as price can stay below Stevie's green line, that's the buy area, 35.46. On the weekly time frame, it's got a Rhodes momentum indicator. The weekly time frame has a TD9 count top out here. So potential pullback. Robert, we're about to go off the air. I say be more patient. And right now, I'd be looking at that 35.46 level. All right, my friend?
All right. Thank you. I appreciate it.
You bet. Hey, folks, stay tuned. 2 more great hours are left, and I will see you on wonderful Wednesday. Have a terrific Tuesday, folks.